Dear EMO students, welcome to this block 2 on national accounts. In this lecture, you will hear about economic actors and economic transactions. My name is Andreas Dold. I'm working for Eurostat in the team for national accounts methodology. Yes, and this is exactly what I will teach you about, the heart of the methodology behind our national accounts. Let me start with a short overview of this session. I will start with explaining what the economic territory is, what are the economic actors and statistical units in this territory. I will speak about kind of activity units and industries, this shortly only. Then in more detail about institutional units and what we call institutional sectors. You will receive a description of all the ESA 2010 sectors. By the way, I'm using the terms ESA 2010 and national accounts interchangeably in this session. I will speak shortly about flows and stocks and about economic transactions. I will end with an overview of the ESA 2010 flows and the link to the changes in balance sheets. After the session, you might come back to this slide and test yourself if you understood what all these terms mean. So, but quite a program we have to tackle, so let's start. And before we go into detail, step back a moment and think about these national accounts. So what is this? As you know, this national account is predominantly made for countries. So the first thing we have to think about, we have to define the limits of this country. Where are the limits of this national accounts we are developing here? And that is what I give you here, the definition of the limits of the national accounts, the national economy, sorry. And this comprises all activity of units that have their center of predominant economic interest on the economic territory. These units are quite important in our national accounts, and they are called also resident units. So remember this term, resident units. There are two terms to explain here. The first one is, what do we mean by this economic territory? The first part. The economic territory is close but not identical to the geographical territory. So the borders of your country. And that's also the reason why we use the term economic territory and not simply territory. This comprises, first of all, the geographical territory of the country, but includes also tax-free zones, for example, in harbors. It also includes the national airspace. It includes territorial waters. And also, when you are at the seaside, the continental shelf of the country. Furthermore, it also includes territorial enclaves. This means, for example, your embassies or your military bases in countries abroad. Another important thing can be oil or gas reserves outside your continental shelves, but which are exploited by units, so units which are resident in your country. These also belong to your national accounts, and this can be economically quite important in some countries. In contrast to this, the economic territory excludes extraterritorial enclaves. This means embassies or military bases, for example, from other countries located in your country. It excludes government agencies of other countries. It excludes the institutions of the EU and other international organizations which are recognized by law or by contract. So this was the first part. The second element of the definition was the center of predominant economic interest. Sounds complicated term. What do we mean by this? A unit has its center of predominant economic interest when it engages in economic activity indefinitely or for more than 1 year. This is a convention, but that's how we set the limit of the national accounts. A second type of predominant economic interest exists when you are an owner of land or building. This also means a unit can have, and this owning of land or building is restricted to this capacity as owning on land or building. For example, when I'm working and living in France, I'm a household unit with my economic interest, of course, in France. But at the same time, I can own, for example, a holiday home in Spain. Then I would at the same time be a unit with economic interest in Spain, but only with reference to activities, transactions that refer to this holiday home. Then some specific cases of resident units I want to explain to you. So residents providing periods spent abroad less than 1 year, for example, border workers or seasonal workers, are counted to be resident units of their home country, so where they live and sleep, basically. Also, tourists, businessmen, or crew members are always counted as residents of their home country. Locally recruited staff of extraterritorial enclaves to also count to their home country. Example, when an embassy engages a cook or a gardener, these people work there for a certain time, but they still count to the national accounts of their home country, where they have their home. Another point or example, institution that is relevant is you. These are students. They are by convention, and students which study abroad, of course, they are by convention always counted as resident of their home country. So irrespective of the study time abroad, even if you study 2 years or 3 years abroad, you still count to your home country. The reasoning behind is also quite clear, I think, because most of the time you're financed then by the parents in your home country, and you also spend and have close relations still to your home country, and it's expected that you return to this country. So now we have clarified, let me step back, we have clarified the where question. So where are the limits of this country, this national account we are looking at? The second important question is the question of who. So who are the economic actors in this economic territory? These are the statistical units we are looking at. The ESA 2010 system uses 2 types of unit, which also serve specific needs and interests and are also specifically presented in the national accounts. These 2 units are the institutional units and the kind of activity units, shortly called also COUS. When we group institutional units together, then receive something we call institutional sectors. I will come back to this in a moment. When we group together kind of activity units, we receive something we call industries. This I explain to you now shortly. With industries, we mean that we put together same or similar economic activities. These economic activities are defined on the 4-digit level of the classification of economic activities, so-called NACE Rev 2. This NACE is the EU-wide harmonized classification system of economic activities. If you don't know about it, it might be a good idea to Google for it for a moment and have a short look at this. I put down here some examples that you know more or less what we speak about and at which level these industries are defined. Examples are the growing of citrus fruits or manufacture of motor vehicles, hairdressing and beauty services, and also tertiary education. So universities serve education services. This is tertiary education. So you see, this is a whole range of activities. In fact, it covers all activities economic activities, to be precise, you can think about, and they are defined at that level. You can imagine that it's quite useful for economic analysis to put together and to analyze the activities on that basis. Imagine, for example, a company which produces cars and bicycles at the same time. And this means when we look at industry, we would separate these two activities and put together the car production activity as one industry and the bicycle production activity as another industry. And we put it together also with all other car producers or bicycle producers. This is very useful for economic analysis. And this is in particular used in the supply and use tables. There you will find back these industries. This will be explained to you in a later session, I think by the colleagues from the Statis. I will come now back to the institutional units and institutional sectors. These institutional units, there we don't look at the economic activity as such, we look at the decision-making units in an economy, which is also an important aspect of angle to view to look at your national accounts and to analyze it. So these decision-making units, what is important for us is that these units have an autonomy of decision. And we have developed criteria to identify these units. These criteria are, first, these entities must be able to own goods and assets. They must really take the economic decisions independently. They must be accountable at law. They must be able to incur liabilities. And they must have a complete set of accounts. This does not mean they necessarily have to write this set of accounts down and publish it, or must be forced by law to publish a set of accounts. It must be the ability to complete this set of accounts. We have one specific type of entities, which we also call institutional units, and these are the households. It's clear that households don't have a complete set of accounts, but nevertheless, for our economic analysis, it's clear and they are absolutely indispensable that we have these households. The definition of institutional units. So, and when we group now together institutional units which have a similar type of economic behavior, this is what we do now. We group together institutional units with similar type of economic behavior, then we receive what we call the institutional sectors and national accounts. And these are, first of all, non-financial corporations, and then financial corporations. These together are the corporations. This includes also quasi-corporations. I'll come back later to this term. We will have the government. We will have the household, as just mentioned before. Then we have something we call non-profit institutions serving households. So these are charity organizations and so on. And we have something which is outside our national economy, of course, which is the counterpart of our activities. And this is the rest of the world. You see there are some codes behind, S11, S12, and so on. These are the national accounts terms, codes, which are in fact developed for all types of activities and institutions and so on. We have in national accounts. They are quite useful, so we always know exactly what we speak about. And I think you have realized now terms and being precise is quite important in national accounts.